So guys, in my last video I showed you how you can use this strategy to pick trades on the 1 minute time frame. As you can see right now, price has aligned to our trend line. Price has aligned to our trend line. So we're looking at um, holding this market for a 10 candle buy or a 10 candle buy to the upside. Can you see a spike has pushed this market to the downside, and as you can see we'll be marking out the zone where we'll be analyzing the market to buy to, that is a 10 candle buy, a 10 candle buy to the upside. So I'll be marking it out with these vertical lines. This is the first candle, this is the second candle. So guys, we'll wait for the remaining candles to play out. So wait for the remaining candles to play out. So as we are waiting for the remaining candles to play out, I'll be showing you guys how you can use this same trend line strategy on the VIX 75 index. I'll be showing you guys how you can use this same strategy on the VIX 75 index market, and this strategy is actually a breakout strategy. It is a breakout strategy. So guys, this strategy does not only work on the VIX index market, it works also on other VIX commodities. You get that, guys? It works also on other VIX commodities. So guys, I'll be showing you how you can use this to pick trades on VIX 75 index, and we'll be using this point. We'll be analyzing from this point. You just need to draw your trend line from two price points, from two structural points. Can you see? From two structural points. Then you'll be looking out for the candle that actually broke. Can you see? The candle that broke the trend line to the upside significantly. The candle that broke the trend line to the upside significantly. After which you go down to the lower time frame. You go down to the lower time frame, that is the 1 minute time frame, to pick out your entry confirmations. You go to the lower time frame, the 1 minute time frame, to pick out your entry confirmations. Now what you'll be looking at for on the 1 minute time frame also is nothing different from what you did on the 15 minutes time frame. You'll be looking out for nothing different from what you did on the 15 minutes time frame, which is actually a breakout on the 15 minutes time frame. A breakout on the 15 minutes time frame. You'll be looking out for the candle that actually broke the trend line on the 1 minute time frame significantly. As you can see in this box, all the candles in this box are the candles that form the 15 minutes candle on the higher time frame. All the candles in this box form the 15 minute candle. So this is the candle that actually broke the 1 minute trend line to the upside significantly. Now as you can see, this candle broke the trend line, and then you'll be using this low, the lowest point, as your stop loss. The lowest point as a stop loss. You'll be using the previous low as your stop loss. As you can see, you won't be risking much in the market. You won't be risking much in the market using this previous low as a stop loss on the 1 minute time frame to scalp all these moves to the upside. Can you see? You'll be scalping all these moves to the upside, guys, using a very small stop loss to scalp all these moves to the upside. Don't forget that this is a scalping move. This is a scalping strategy. So guys, you're not to hold the trade for too long. Don't hold the trade for too long. So guys, we're looking out for more entry reasons in the market. More entry reasons in the market. Look at this point. Can you see this point in the market? Can you see this point? This is another entry criteria on the 15 minutes time frame. You mark out the candle that broke above the trend line significantly. Let me just get that done now. Okay, mark out the candle that broke the trend line to the upside significantly. Then you go down to the 1 minute time frame for your entry. Go down to the 1 minute time frame for your entry. Now what will you be looking out for on the 1 minute time frame? You'll be looking out for another significant breakout. Did you get that, guys? Another significant breakout. You draw a trend line, and wait for a breakout to the upside, a candle that breaks the trend line to the upside significantly, using the previous low as your stop loss. Using the previous low. Let me just zoom in for you to see well. Can you see this is the candle? This is the particular candle that broke price to the upside. Then you'll be entering from that point. After the candle closes, you enter for your buy to the upside. Enter for your buy to the upside. Then you'll be using the previous low as your stop loss. Can you see? Can you see that? You will be using the previous low as your stop loss. Can you see the move to the upside? Can you see all these moves to the upside? Can you see the move to the upside, guys? So as I said, this is a scalping strategy. You don't need to stay in the market for too long. You don't need to stay in the market for too long. Just you'll be risking very, very small in the market to make much in the market. At least you'll be having a 1:2 risk to reward ratio on this move. And guys, don't forget, no strategy is 100%. No strategy is 100%. You might get tapped out on some trades, but overall, you should be profitable, because this actually is a profitable strategy. This is a profitable strategy. You should be taking at least if you be taking at least 10 trades, then be assured of 7 or 8 going in the direction of your bias. So let me look out more for more entry reasons. I think there's an entry reason at this point. Okay, I think there is an entry reason at this point. Let me mark this zone out for you guys to see. Can you see that? It's just a very simple strategy, a trend line strategy. Wait for the candle to break above the 15 minutes trend line significantly. Don't rush trades. Don't rush your trades. Mark that candle out. Once you mark that candle out, then you wait for it to close. Once the candle has closed above the trend line, go down to the 1 minute time frame. Go down to the 1 minute time frame, guys. Let's quickly pick that out on the 1 minute time frame. Okay, can you see? Let me zoom in for you to see. Can you see that, guys? Let me zoom in one more time for you to see. Can you see? Now you take your trend line, and mark it out. Can you see? You mark it out. You mark that structure out, and once there's a break of structure of trend line to the upside, can you see that candle that broke the trend line significantly to the upside? After that candle closes, you enter for your buy, and then you use the previous low as your stop loss. You use the previous low as your stop loss. As you can see, you'll be risking very, very small in the market. Can you see the move to the upside? Can you see this move? Can you see this move? Can you see this move to the upside? Can you see this move to the upside? So you'll be risking very, very small in the market and making much from the market. So guys, let's look at where the price is at this point in the market. Okay, can you see this already? 1, 2, 3, just about almost 10 candles that is already been formed. And even though there was a spike to the downside, but as you can see, there's already 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 candles being formed in the market. So if you are scalping for 5 candles, you would have exited the market. But if you are scalping for 10 candles, you would have still held. Although this is not really okay. Can you see 1, 2, 3, 4? Let's count this together, guys. Let's count this together. 4, 5, 6, 7, 8, 9, and 10. 9 and 10. Can you see, guys? Can you see? This is already 10 candles to the upside, 10 candles to the upside. Can you see the first spike to the downside? First spike to the downside. Now can you see, guys, this is already 10 candles, 10 candles. Can you see it is even moving more than the 10 candles, excluding, if you want to even exclude this spike, if you want to exclude this spike, then you will still have your 10 candles. So we might be seeing a spike any moment from now, we might be seeing a spike any moment from down, but we would have gotten our 10 candles and we would have exited the market. We might be seeing a spike any moment from down, but that is not really our case, that's not really our issue, because we would have exited the market from our point of entry. You get that, guys? Counting it is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Can you see you have gotten your 10 candles and you would have exited the market? So even excluding this bearish candle, this small spike that happened, you would have still gotten your 10 candles and you would have left the market. Can you see? There's every tendency that price spikes at this. Can you see? Can you see, guys? Can you see the spike? Can you see the spike? Can you see the spike? But we would have gotten our 10 candles and we would have left the market. This is about 12 candles to the upside before the spike occurred. 12 candles to the upside before the spike occurred. So guys, can you see how profitable this strategy is? Can you see how profitable this strategy really is? So guys, this strategy, this trendline strategy I use on the VIX index market also works on other VIX commodities. It also works on other VIX commodities. It works both for buys and sells. So let's look at this entry again. Look at this point. Can you see that candle that closed above the trend line significantly? Then you mark that zone out. Mark that zone out and then go down to the 1 minute time frame for entry confirmations. As I said, this works for both buys and sells. Buys and sells. Then what you want to do on the 1 minute time frame, let me zoom it in, is that you want to wait for another significant break of trend line. Significant break of trend line. Significant break of trend line. Then once the candle closes above the trend line on the 1 minute time frame, what you'll be looking at for is entering the market to the upside. Entering the market to the upside. So guys, before this strategy, the one we are waiting for on Crash 500 plays out, I want to just have a short talk with you guys. But before then, quickly let me show you something. Can you see? We'd have used this previous low. Can you see? This is the candle that closed above it significantly. This is the candle that closed above it significantly, and then you would have entered the market from the next opening candle. Can you see? And use this previous low as a stop loss to ride this move to the upside. Can you see? And once you begin to see bearish pressure to the downside, you close out. Once you begin to see strong bearish momentum to the downside, you close out. So guys, that's how this strategy works. It works for all VIX commodities. Can you see? Let's quickly check other commodities. And let me quickly have the quick talk with you guys. I've had so many traders come to my DM to talk about emotional trading, that how can they survive emotional trading. How can they survive emotional trading? And I've had to tell them that once you've done your analysis, your top-down analysis, then you can exit the market for about 4 hours, 1, 2, 3, or 4 hours, depending on where you are analyzing the market from. Depending on where you are analyzing the market from. If you are analyzing the market from daily time frame, after doing your top-down analysis, you've placed your stop loss, you've placed your take profit, then I would advise that you stay away from the market. If you are analyzing from the daily time frame, I would advise you stay away from the market for about 4 hours. Can you see this point? Let's look at catching a spike at this point. So guys, can you see we were able to trail the price from this downside for a buy to about 10 candles to show you guys how profitable this strategy is. Now let's look at catching a spike. Let's look at catching a spike, guys. So we have to wait for about 4 to 5 candles, before we can catch this spike, So let me just mark it to the downside. We'll be expecting a spike from that point to the downside. We'll be expecting a spike from that point to the downside. Can you see we roll the market to the upside for about 10 candles, and right now we'll be expecting to catch a spike to the downside. So guys, let me just continue with what I was saying. If you're analyzing from the daily time frame, to beat emotional trading, if you are analyzing from the daily time frame, I advise that you stay away from the market for about 4 hours. At least you've done your analysis from the daily time frame down to the 4 hours, down to the 1 hour, then you take your entry from the 15 minutes time frame or the 5 minutes time frame, or as low as the 1 minute time frame. Then you will be looking at staying away from the market for about 4 hours. Since you are actually analyzing from the daily time frame, they advise that you stay away from the market for about 4 hours to allow your buyers to play out. Can you see more entry reasons? Can you see more entry reasons? Can you see more entry reasons, guys? So you allow your buyers to play out. Stay away from the market for about 4 hours. Allow your buyers to play out about 3 to 4 hours. Allow your buyers to play out, and then come back to check the market. If it taps you out on stop loss, then you wouldn't be losing much. If you are a proper risk manager, you wouldn't be risking much or losing much if you're a proper risk manager. And if it goes in the direction of your buyers, then you wouldn't have closed out in a very good trade, because I have so many traders come to my DM to tell me that after they closed out, after they panic and then close out on a trade, it eventually goes in the direction of their buyers. After they panic and then they close out in a trade, it goes in the direction of their buyers, and then they begin to beat themselves up. They begin to whine and cry, saying, oh, I missed this trade, just because they were emotional about it. So to beat emotional trading, you just have to, after analyzing, if you are doing your analysis or top-down analysis on the daily time frame, stay away from the market for about 3 hours, then come back to check your market. And if you're analyzing from the 4 hours time frame, then I recommend that you stay away from the chart, stay away from the market for about an hour or two after you've done your top-down analysis, after you've placed your stop loss, after you've placed your take profit. Stay away from the market, so that you won't close out from a good trade. Always watching your market after placing positions, after placing entries, might make you emotional. So guys, stay away from the market and allow your buyers to play out. Don't be emotional about your trading. And how to do that is that you stay away from the market after doing your top-down analysis. Did you get that, guys? After doing your top-down analysis, stay away from the market, because if you just sit with your screen, sit with your chart, and you're just monitoring it, you might eventually close out on a very good trade. I've had so many trades. I've analyzed so many markets. Like, when I mean so many markets, I mean so many markets. I've analyzed so many markets, and it's okay. We should be looking at a spike at the moment. Okay, guys, we'll be looking at a spike at the moment. We'll be looking at price spiking very, very soon. So guys, I've actually analyzed so many markets, and it remains about 5 pips for the market to take me out, and the market reverses in the direction of my buyers. The market reverses. Can you see, guys? Can you see the spike? Can you see the spike? Can you see the spike, guys? Can you see the spike, guys? Isn't this crazy? Isn't this strategy crazy? Can you see the spike? Can you see the spike? So guys, this strategy works. This strategy works. I am so confident in this strategy. I am so confident about the strategy that this strategy works. That this strategy works. Can you see we rode the market to the upside? We speculated that after touching the trend line, price was going to move to the upside, and can you see price bought to the upside, and after seeing another sell confirmation, we speculated that price was going to sell to this downside. Can you see price has sold to this downside? So as I said, you can see entries like this like 3-4 times in a day, and we've just seen 2 entries on a commodity, on a single commodity. That is on a single commodity. On crash 500, we've seen 2 entries. Can you see? We've seen 2 entries, a buy and a sell, a buy and a sell. Now imagine on other commodities, imagine seeing this twice a day on a single commodity, on other commodities too, seeing these 2 times on crash 500, 2 times on boom 500, 2 times on crash 1000, and 2 times on boom 1000. That is already about 8 trades in a day, 8 profitable trades in a day, and you can see this about 10 pips, about 16 pips to the upside thereabout, about 16 pips to the upside thereabout. That's actually a very good pip movement. That's a very good pip movement. So guys, there are times price is about to take me out about 5 pips to my stop loss, and it reverses in the direction of my bias, and I don't get stopped out. So guys, that's how you trade. You don't just sit with your chart monitoring it all day, monitor it all day, if you're not a scalper or intraday trader. So guys, that's that about that. Can you see how this strategy works? Can you see that, guys? This is actually a live trade, and you can see for yourself that this strategy works. So guys, that's that about that. This video.